Welcome to Legacy Financial. I'm Mike Mays, one of the founding partners of Legacy, and I'm sitting here with Kathy Starks, one of our financial advisors, Robbie Kuhnheim, our Director of Investments, and Paul Sartori, one of the other founding partners of the firm. We wanted to take a minute here just to kind of talk to you a little bit about this time we're in, which is a really unique time with the coronavirus and the market movements and all the other things that are going on that, we're all being affected by. And we just want to make sure that we give you a little bit of how we're thinking. Let me throw out the first question to Paul Sartori, one of the founding partners of the firm. Paul, from an owner's perspective, tell me something that you think you want our clients to know or people to know about how we think.
Yeah, well, it's not a fun time, and know that we care. It's you're our family. So I've been in the business 35 years, so I saw the Black Monday in 1987. I saw the recession of the early 90s, the dot-com Y2K bubble in 2000, and then most recently between 2007 and 2009, the global financial crisis, which was really ugly. Second worst scenario in our history behind the Depression. So know that we care. As a firm, we have 16 people that are here ready and willing to take any phone calls, to see you in person, to do a video conference if you'd prefer that. We are totally enabled to do anything from home or at work or at your location, so everyone is mobile. We have all the technology known to man to operate our business from anywhere. We have a great team here, and anyone is always ready and willing to help you. I would also say that know that we're very firm in our convictions about how we operate, and it's all up to your financial plan, which we care deeply about, and we're very, very protective of that. And that's how we roll.
That's great. Let me throw a question to Robbie Kuhnheim, our Director of Investments, who's been working around the clock right now and adding a lot of good to everyone's portfolios. Robbie, without getting too technical, maybe you could talk for a minute about the construction of the portfolios for our clients and some of the changes you've been working on.
Absolutely. I think probably the most important thing to recognize is that we build our portfolios with volatility in mind. We build them, knowing that markets don't always go up. That you do experience volatility, you do experience down times. So we don't like them any more than the clients like them, but you always have to keep that in the back of your mind. That's why we have diversified portfolios. That's why we invest in bond funds as well as stock funds. And we use liquid alts, we use the minimum volatility funds, all with risk management in mind. So that being said, what we're doing right now, when the calendar rolled from 2019 into 2020, we started to reduce some of our high yield exposure in the portfolio. It's highly linked with equity markets. Brings a little more risk to your bond exposure. So we did start to reduce that. We're still reducing that position. Outside of that, though, the biggest thing we're doing right now is rebalancing. When you see times of volatility, oftentimes your portfolio allocation can get a little bit out of whack. So we are rebalancing right now, and just looking for opportunities to do that every day for client portfolios. Additionally, for those with taxable assets, we're looking to do some tax loss harvesting. Locking in some of these losses so that they can claim that against their investment gains at the end of the year on their taxes. So. No major wholesale portfolio changes. You'll find throughout history, oftentimes when you're making huge changes when the markets are down, that's more often than not the wrong decision. So we're just sticking with our investment discipline, rebalancing, and as you guys have all said, we're here for clients if they have questions.
That's a great point, Robbie. Let's also just talk for a minute about with a client who looks at the news and sees the S&P 500 or the Dow Jones come down a huge number and immediately goes to thinking that's what happened to their money. That isn't always necessarily the issue. Maybe you could talk about the difference between what they're invested in and those exact indexes.
Absolutely. Oftentimes you watch the news, you'll see the Dow Jones quoted or the S&P 500 quoted, and you're looking and that's down 15-20% at this point in time. But again, like I mentioned, we own diversified portfolios, so we're not just owning U.S. large cap stocks. There are bond funds in your portfolios. The equity exposure we do have, we're using minimum volatility funds. Those funds are designed to not capture the entire down moves of the market. So the most recent numbers I looked at this past week, was just a couple days ago, but we're tracking about 60% down in our growth portfolio. So market's down 20%, you can expect to only capture 60% of that. Obviously we can't guarantee that it continues like that, but that's the general purpose of the way we invest.
Let me throw out a question to Kathy. Starks, one of our financial advisors. From a planning perspective, Kathy, when you think about clients and a nugget that we might want to give them that we hope they know, or they may already know, but just to reiterate, give me your thoughts.
I want our clients to understand that we're listening to them, we hear them.
Yes.
It is definitely a time of fear, stress, anxiety, and I feel honored to be able to work with our clients and really help remind them that we're going back to the plan. We're going to look, take a break, take a breather, high level, and really take a look at why we're investing.
Yeah.
And we're investing around their risk tolerance levels, their investment objectives, just really their overall plan. So we'll start there and revisit that. And when we do that, it tends to really remind our clients that we're not investing for today or tomorrow, next week, even next year. We're really investing for a lifetime.
Yes.
And to reach those goals, that we're investing appropriately, to help them get through times like this, and really to meet their end goal.
It's amazing how so quickly we can shift to focusing on the issue right in front, and really
Right.
we're supposed to be looking at the whole big picture.
The whole big picture,
And you do a
yeah.
great job of that
Oh, thank
with
you.
people, so thank you.
Thanks.
So in closing, thank you for listening to a message from Legacy Financial. From myself, Kathy, Robbie, and Paul, we take it a great privilege along with the rest of the firm to serve you, and we'll look forward to being in touch.